Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 27th of January 2020. And yesterday we published a video entitled No Interest Rate Cut in January and Only One Predicted for 2020. And on Saturday we published our Gold and Silver Weekly Update for the week ending the 24th of January and have placed links to both of these in the description box below. Now, in the weekly update, we predicted higher gold and silver prices early this week. And 2 weeks ago, we highlighted that the coronavirus was something to be watched closely, as it could be one of those black swans or geopolitical type events which truly could affect markets. Well, this morning, we have seen gold rise some $11. Now, at the time of writing, it's 10:03 GMT. And gold is now standing at $15.83, and silver has risen 15 cents to $18.26. The headlines essentially are that the coronavirus is dominant, and whilst we hinted over the weekend this could be a good time for equity markets to take profits, they may indeed use this virus as an excuse to do so. But we are still somewhat unconvinced that the virus is as benign in terms of economic effect that some would lead us to believe. Now, we are not, by any mark, stating it's going to prove devastating, though if it becomes uncontrollable, then it will be. But we are stating that so much media attention is focused on it at present, it is bound to have an impact. Just this morning, one can see headlines throughout both the Western and Asian media focusing on this subject. And we shall just briefly read two articles from Reuters published this morning. Reuters article dated 27th of January 2020. FTSE 100 tumbles again as coronavirus fears spread. UK shares dropped on Monday as the coronavirus spread globally and caused more fear, with death tolls more than tripling from last week, while mid-cap constituent payments group Finabler outperformed. The FTSE 100 index, which had recovered on Friday after the World Health Organization issued a measured assessment of the virus, stumbled 1.4% by 8:39 GMT, set for its worst daily performance since early December. All but 3 stocks were in negative territory on the main bourse in early dealings. The mid-caps were 1.3% lower, but Finabler helped contain some losses as it jumped 7% after reassuring markets that it had sought clarifications from BRS, an investment vehicle owned by Shetty, that pledged over half the company's stock as security against certain debts. Finabler, which had lost nearly 1/3 of its market value due to Friday's fall, was headed for its best day since late November. News that China's death toll from the coronavirus, discovered at the end of last year, has risen to 81, spooked investors and dragged an index of leisure and airline stocks down nearly 2% to its lowest since mid-December. Nearly 5% has been wiped off the index since last week. The sector is exposed to a slowdown in the travel market because of the outbreak, with some standout individual losers including British Airways owner IAG, which dropped 5%, and China-exposed luxury brand Burberry, down 4.8%. By the end of Sunday, 2,744 cases of the virus had been recorded, with countries including the United States and Singapore having confirmed the spread of the virus. Quote, "This has the potential to really rattle markets, and with stock markets having been at or very near all-time highs before all this broke, this is a perfect selling opportunity," unquote. Markets.com analyst Neil Wilson wrote. Quote, "If politics is hard to grasp for most buy-siders, then virology is impossible. That is enough reason to see de-risking to happen, although I would still anticipate dips to be bought," unquote. Sustained falls in travel-related blue-chip stocks over the last few trading sessions has left the main index with a 1% loss so far this year. End of article. And now the second article on oil prices. Reuters article dated 27th of January 2020. Oil slumps further as China virus spreads. Crude prices fell more than 2% to multi-month lows on Monday as the rising number of cases of the new coronavirus in China and city lockdowns there deepen concerns over oil demand. Brent crude fell by $1.28 a barrel, or 2.1%, to $59.41 by 0744 GMT, having earlier dropped to $58.68, its lowest since late October. US crude was down by $1.24, or 2.3%, to $52.95, having earlier eased to $52.15, the lowest since early October. Saudi Arabia's energy minister, Prince Abdulaziz bin Salman Al Saud, seeking to calm the market, said on Monday he was watching developments in China and said he felt confident the new virus would be contained. Markets are being, quote, primarily driven by psychological factors and extremely negative expectations adopted by some market participants, despite the virus's very limited impact on global oil demand, unquote, he said. With the coronavirus's ability to spread getting stronger, most financial markets are being hit, although many are closed in Asia due to Lunar New Year holidays. Quote, such extreme pessimism occurred back in 2003 during the SARS outbreak, though it did not cause a significant reduction in oil demand, unquote, Prince Abdulaziz said. He also said he was confident the kingdom and other members of the Organization of the Petroleum Exporting Countries, otherwise known as OPEC, along with producers in a group known as OPEC+, had the capability to respond and steady the oil market if needed. OPEC+, which includes Russia and other producers, has been withholding supply to support oil prices and recently increased its agreed output reduction by 500,000 barrels per day to 1.7 million barrels per day through March. Prince Abdulaziz said on Friday the aim of OPEC+ was to cut seasonal inventory builds that typically occur in the first half of the year. All options were open when OPEC+ meets in Vienna in March, he said. Quote, investors' fears on oil demand has risen considerably, driven by unfavorable US inventories and concerns on impact from the coronavirus outbreak, unquote, Goldman Sachs said in a note. End of article. Now, one can see the impact these events can have, with oil, stocks and precious metal prices all being affected. The dollar index, though, is holding firm, while at the same time gold and silver prices are rising. And this is suggesting, of course, capital flight to safe haven assets. It's small at present, but certainly could increase. Now, as we mentioned in yesterday's video, there is a substantial amount of economic data to be released this week, with the FOMC statement on Wednesday. That said, should any of these figures, in the slightest, prove negative, then we shall see the current trend of stock market decline and precious metal investment increase, especially in the current fragile environment. Now, of course, common sense dictates that any announcement that the virus is under control will then have the opposite effect. The question we all have to ask, of course, is when will that be? Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.